Have you ever heard of BlackRock? If you haven't, you're not alone. But this company, operating quietly in the background, has a staggering influence on your life. From the food you eat, to the house you live in, and even the retirement you're saving for. So, what is BlackRock? And how did it become the most powerful financial institution on the planet? Let's start with a number. $10 trillion. That's 10,000 billion. It's a figure so vast it's hard to even comprehend. It's more than the entire economies of Japan and Germany combined. This is the amount of money BlackRock manages. They don't technically own all this money, but they manage it on behalf of their clients' pension funds, insurance companies, sovereign wealth funds, and yes, millions of ordinary people like you and me through their iShares. Because they manage so much money, they are the largest shareholder in thousands of companies worldwide. Think of the biggest names, Apple, Microsoft, Amazon, Google, Coca-Cola, Johnson & Johnson. BlackRock is a top shareholder in all of them. This gives them immense power. When you're the biggest investor, CEOs listen to what you have to say. Your vote at shareholder meetings can decide the future of a company. So how did this all start? The story begins in 1988. A man named Larry Fink, along with 7 partners, founded BlackRock with a vision. Fink had a background in mortgage-backed securities and understood the importance of risk management. Their initial focus wasn't on flashy trades but on sophisticated risk analysis. They built a powerful computer system, a financial brain called Aladdin. That's Aladdin, which stands for Asset, Liability, and Debt and Derivative Investment Network. Aladdin is the secret sauce. It's a massive network that monitors and analyzes trillions of dollars in investments, tracking everything from market fluctuations to geopolitical risks. It's so powerful and reliable that not only does BlackRock use it for its own assets, but other major financial institutions and even governments pay to use it. Think of it as the central nervous system of the global financial world. The real game changer for BlackRock came after the 2008 financial crisis. The global economy was on the brink of collapse. Who did the U.S. government turn to for help to manage the toxic assets from failing institutions like Bear Stearns and A? They turned to Larry Fink and BlackRock. Their expertise and their Aladdin system made them the go-to firm to clean up the mess. This role elevated BlackRock from just another asset manager to a quasi-officio advisor to governments and central banks, cementing its position at the heart of the financial system. Then, in 2009, BlackRock made another genius move. They acquired Barclays Global Investors, and with it, the iShares brand. This was their ticket into the booming world of exchange-traded funds, or an ETF is like a basket of stocks that you can buy and sell on the stock market, just like a single share. They're popular because they're a simple, low-cost way to diversify your investments. Suddenly, BlackRock wasn't just for big institutions anymore. They were in the wallets of millions of retail investors, making them a household name in the investment world and funneling trillions more into their management. So, BlackRock's power comes from 3 main sources. First, their sheer size. With $10 trillion under management, their investment decisions move markets. Second, their technology. Aladdin gives them an unparalleled view of the global financial landscape. And third, their political influence. Having the ear of presidents and central bankers gives them a unique and powerful position. This concentration of power naturally raises questions and concerns. Critics argue that having so much influence in one company creates systemic risk. What if Aladdin makes a mistake? What if BlackRock's investment strategy goes wrong? The ripple effects could be catastrophic for the global economy. It's the too big to fail problem on a whole new level. There's also the issue of corporate governance. As a top shareholder in so many competing companies, for example, both Coca-Cola and PepsiCo, how do they vote? Do they encourage competition? Or does their common ownership lead to less aggressive business practices, potentially resulting in higher prices for consumers? This is a hot topic of debate among economists. Some studies suggest that this common ownership can soften competition, which isn't great for us, the consumers. Furthermore, Larry Fink's annual letters to CEOs have become major events. In recent years, he has pushed companies to focus more on ESG, environmental, social, and governance. He's urged them to consider their impact on climate change and society. This has been praised by some as a positive use of their influence, pushing capitalism in a more responsible direction. However, it has also drawn criticism from others who believe BlackRock is overstepping its role as an asset manager and pushing a political agenda. They argue that a financial firm's only goal should be to maximize returns for its clients, not to engage in social engineering. This has put BlackRock in a difficult position, caught between those who say they were doing too little for the planet and those who say they were doing too much. For instance, while they talk about sustainability, BlackRock is still one of the world's largest investors in fossil fuel companies. This leads to accusations of greenwashing, saying the right things about the environment while their investments tell a different story. It highlights the complex tightrope they have to walk, balancing profit motives with growing demands for corporate responsibility. So, what does this all mean for you? Well, it's very likely that BlackRock is connected to your money in some way. If you have a 401k or a pension plan, chances are a portion of it is managed by BlackRock or invested in their iShares. The performance of your retirement savings is tied to their success. The companies you work for, the products you buy, the services you use all are influenced by BlackRock's investment decisions. Their push for certain corporate behaviors, whether it's on climate change or diversity, shapes the business world we all live in. BlackRock represents a new kind of power in the 21st century. It's not the power of an army or a government, but the subtle, pervasive power of capital. It's a company that operates at the intersection of finance, technology, and politics, shaping our world in ways most of us never even see. They're not an evil empire bent on world domination, as some conspiracies might suggest. They are a reflection of how our modern financial system has evolved, with wealth and influence becoming incredibly concentrated. The story of BlackRock is the story of modern capitalism, itself a tale of innovation, ambition, and unprecedented power. It raises fundamental questions about who holds power in our society and how they should be held accountable. Understanding BlackRock is essential to understanding the world we live in today. They are the silent giant, the company that, in many ways, owns everything, and their influence is only likely to grow. It's a fascinating, complex, and incredibly important story to follow. Thanks for watching. If you found this deep dive interesting, do only forget to like this video and subscribe to the channel for more content that uncovers the hidden forces shaping our world. See you next time.